Every election cycle brings a wave of uncertainty, that's for sure. And this year, with potential shifts in taxes and trade policies, well, things could get especially interesting.
Okay, so we've got some really insightful sources to look at today, and I'm kind of curious to see how all this could potentially, impact your portfolio.
Absolutely. Well, why don't we start by looking at the market itself? One of the articles, it's from Forbes. It points out that the S&P 500, historically, it's experienced an average drop of about 2% in the month leading up to a presidential election.
2%. Hmm. That's not insignificant. So are we talking about like pre-election jitters or something like that?
Exactly, yeah. Investors tend to get a bit cautious, during times of political uncertainty. It's understandable. They might hold back on making any big moves or even sell off some assets. And that can create volatility in the market.
Oh yeah, for sure. But as history shows, those dips are often short-lived, at least according to this Forbes article.
Right. The Forbes article also mentions that the market typically rebounds within 6 months after the election, regardless of who wins.
That's good to know. So maybe just a little short-term turbulence, but the long-term outlook tends to be more stable.
Precisely. And speaking of long-term trends, one of your sources from Seeking Alpha, it dives into something called the presidential cycle theory.
Oh, yeah, I've heard of that. But to be honest, I'm not really sure what the details are.
Well, it's actually quite interesting. The theory suggests that the stock market tends to perform better in certain years of a presidential term. Historically, the third year of a presidency has shown the strongest average returns.
Oh, interesting. So if this theory holds true, we might be in for a positive year in the market, regardless of who's in the Oval Office.
Yeah, potentially. But of course, it's important to note that this is just a theory. Past performance doesn't guarantee future results or anything like that. But it's something to keep in mind.
For sure, for sure. Okay, so we've talked about market jitters and historical cycles. Now, let's get into taxes. I mean, this is always a big topic during elections, and it can have a real impact on investors.
Absolutely. One of the key areas to watch here is capital gains taxes. Your source from the Wall Street Journal, it highlights how potential changes could significantly impact your investment profits.
Yeah, that's right. For those who might not be familiar, could you break down exactly what capital gains taxes are?
Sure. So capital gains taxes, they're essentially what you pay on the profit you make when you sell an asset, like stocks or real estate.
Got it. So if you buy a stock for $100 and sell it for $150, you've made a $50 profit, and you'll be taxed on that gain.
Exactly.
Okay, so how could this election potentially shake things up in the capital gains department?
Well, the Wall Street Journal article, it points out that one of the candidates has proposed increasing the capital gains tax rate for high-income earners.
And that could cut into investors' profits,
Right.
right?
Exactly. If the capital gains tax rate goes up, investors will end up paying a larger portion of their profits to the government.
Yeah, that's definitely something to consider for anyone thinking about buying or selling assets in the near future.
Absolutely. And it's not just capital gains taxes we need to think about. The Tax Foundation, in one of your sources, suggests that changes to corporate tax rates could also have a ripple effect across the entire market.
Hmm. So if corporations end up paying more in taxes, how does that impact individual investors?
Well, if a company's tax burden increases, it could have less money available for things like dividends, those payments that companies make to their shareholders.
Right. So essentially, higher corporate taxes could potentially mean less money in investors' pockets.
Yeah, that's one possible outcome. Of course, there are a lot of factors that influence a company's decision to pay dividends, but it's definitely something to keep in mind.
For sure. All right, so we've covered market volatility, we talked about the presidential cycle theory, and potential tax implications. What else should investors be thinking about as we get closer to this election?
Well, let's shift our focus to specific sectors of the economy. One of your sources from Reuters analyzed which sectors tend to perform better under different political parties.
Okay, I'm intrigued. Give us the scoop.
Well, according to their analysis, healthcare stocks, historically they've shown an average return of 12% under Democratic presidents, but only 7% under Republicans.
Wow, that's a pretty big difference.
hmm
What about other sectors like technology or energy?
Yeah, well, the energy sector is particularly interesting. One of your essays highlights how potential changes in environmental policy could significantly impact renewable energy companies.
Okay, so let's talk about renewable energy for a second.
hmm
This is a sector that's been getting a lot of attention lately. But how could the outcome of this election influence its trajectory?
Well, one of the candidates has pledged to invest heavily in clean energy infrastructure and transition away from fossil fuels. This could create some big opportunities for companies involved in solar, wind, and electric vehicles.
So if that candidate wins, we could see a boom in the renewable energy sector.
It's definitely possible. Of course, the details of these policies and how they're implemented would play a major role in shaping the sector's future, that's for sure.
Right, so it's not just about who wins, but what specific policies they actually enact. Man, this is getting complex.
It is. And that's why it's so important to stay informed and understand the nuances of these potential policy shifts.
All right, well, we've covered a lot of ground in this first part of our deep dive. We talked about market jitters, the presidential cycle theory, potential tax implications, and the potential impact on specific sectors like healthcare and renewable energy.
It is a lot to digest, but understanding these factors can help people make better investment decisions as we navigate the selection season.
Absolutely. Now, before we move on to the next part of our deep dive where we'll explore specific investment strategies and how to navigate the post-election market, we're going to take a quick break.
Yeah, we'll be back in a moment to delve deeper into how you can position your portfolio for success in this ever-changing landscape. Stay with us.
Welcome back to our deep dive into elections and investing. You know, we've already kind of uncovered some interesting stuff about how this election could impact your portfolio.
Yeah, for sure. We've talked about market trends, potential tax changes, and how different sectors perform under different political, climates.
It's clear that elections can create opportunities, but also some challenges for investors. So I kind of want to get into the practical side of things, like what are some things investors can actually do to get through this potentially volatile time?
Well, one of your sources, it's an episode outline that you provided, and it really emphasizes diversification. It says it should be like a core
Oh,
strategy.
yeah. Diversification, that's that classic don't put all your eggs in one basket approach.
Exactly, yeah. By spreading your investments across different asset classes like stocks, bonds, real estate, that kind of thing, you can reduce your overall risk.
Makes sense. So even if, let's say, the election leads to some, short-term volatility in the stock market, my bond holdings could kind of help cushion the blow a little bit.
That's the idea. Diversification can be like a shock absorber for your portfolio and help smooth out those bumps in the road.
Okay, so we've talked about kind of preparing for potential market swings. But what about those longer-term investment goals?
Right. Well, one of the articles you shared, this one's from Vanguard, and they give some pretty good advice for long-term investors.
Okay, what do they say?
Well, they emphasize staying focused on your financial goals and not getting caught up in the election day hype.
So basically resist the urge to make any rash decisions based on, who wins or loses.
Exactly. Trying to time the market based on election results, it's not usually a winning strategy.
Makes sense. So you're saying it's more about building a diversified portfolio that aligns with your own personal risk tolerance and long-term goals.
Yeah, it's all about playing the long game, not just trying to win every trade or anything.
I like that.
Yeah.
Okay, so we've talked about diversification and kind of sticking to our long-term plan. But it's still important to stay informed about potential policy changes, right? I mean, those can definitely impact specific industries.
Oh, absolutely. Even if we're not making any knee-jerk reactions, we still need to kind of keep up with the changing landscape.
Right, for sure. So what are some of the key areas we should be watching?
Well, one big one, like we mentioned earlier, is tax policy. Changes to capital gains taxes, for example, could have a big impact on investment returns.
Yeah, and we can't forget about those potential ripple effects of corporate tax changes too, like we were saying,
Yeah.
that could affect dividend payouts and company performance overall.
Right, exactly. Another thing to watch is global relations and trade. That's really important if you're invested in multinational companies, the ones that operate across borders.
Yeah, because shifts in trade agreements or, tariffs, that could really mess things up, like disrupt supply chains, increase costs, impact a company's bottom line, all that.
Precisely. So, yeah, keeping an eye on those international developments is really important.
Okay, and what about consumer sentiment? We were talking about how elections can impact consumer confidence, right?
Mm.
And then that drives spending and impacts different sectors of the economy.
That's right. A jump in consumer confidence could be good for sectors like retail, travel, entertainment, that kind of thing. But on the other hand, a drop in confidence might mean people shift towards more, defensive investments.
So it sounds like staying up to date on consumer confidence reports is a good idea for investors.
For sure. Now, before we move on to potential post-election scenarios, do you have any questions about kind of navigating the market during this election season?
Yeah, actually, this is all making a lot more sense now. But I was wondering, is there anything investors can do before the election to kind of, get ready?
That's a great question. And yeah, there are a few things you can do to prepare yourself for whatever happens after the election.
Okay, give us those insider tips. What can we do to get ready?
First things first, review your portfolio. Make sure your asset allocation, aligns with your risk tolerance and long-term goals.
Okay, so like if I'm the kind of person who gets anxious about market volatility, maybe I should consider being a bit more conservative with my investments.
Yeah, exactly. It's all about finding a balance between potential growth and peace of mind. That sweet spot.
Portfolio review, check.
What else?
This might sound a little weird, but think about building up your cash reserves.
Wait, so you're saying we should actually keep some money instead of investing all of it?
Yeah, that's right. Having some extra cash gives you more flexibility and buying power if the market takes a dip after the election.
Ah, I see. So if stock prices suddenly drop, I can jump in and snag some bargains.
Exactly. It's all about taking advantage of those moments of market uncertainty, being opportunistic. I like that. Okay, so portfolio review, cash reserves, anything else we should add to our pre-election checklist?
Yeah, one more thing. Stay informed. Don't just get your financial news from, social media or those sensationalized headlines.
So you're saying we should actually read those long, complicated financial articles?
Well, you don't have to read every single one, but you should definitely check out reputable sources like financial publications, economic think tanks, investment research firms, that kind of thing.
Okay, so the Wall Street Journal, the Financial Times, maybe some in-depth reports from, respected analysts.
Exactly. Those sources will give you more nuanced, data-driven perspectives on how the election could impact things.
Staying informed, that's definitely key. But let's be real. Sometimes all this financial stuff can be a bit overwhelming, all that jargon.
I know what you mean, and that's where a good financial advisor can be super helpful.
Yeah, someone who can kind of explain things in a way that makes sense and give advice based on my specific situation.
Exactly. A financial advisor can help you come up with a personalized strategy, answer your questions, and give you guidance when things are uncertain.
So basically like having a financial coach in your corner.
Exactly. So whether you're new to investing or you've been doing it for a while, don't be afraid to ask for some professional help.
Awesome. Okay, well, I'm feeling a lot more ready for this election season now. Got my portfolio in check, cash reserves are ready, and got my financial advisor on speed dial.
That's the spirit. And remember, knowledge is power. If you have the right information and a good strategy, you can navigate the market with confidence no matter what happens with the election.
All right, so before we jump into the final part of our deep dive where we're going to explore some post-election scenarios, let's just quickly go over those pre-election steps one more time.
Okay, so first, take a look at your portfolio and make sure it's a good fit for your risk tolerance and your long-term goals.
Got it. Second, build up some cash reserves. That'll give you more flexibility in buying power if the market goes down.
And third, stay informed. Check out reputable financial sources and don't be afraid to talk to a financial advisor if you need some guidance.
Awesome advice. Remember, everyone, stay calm, don't panic, and focus on the long game. All right, let's take a quick break, and then we'll be back to talk about those post-election possibilities. Welcome back to our deep dive. We're looking at elections and investing, and in this final part, we're going to look at some things that might happen after the election.
Yeah, we've covered a lot of ground already, that's for sure. Market jitters, taxes, different strategies, staying informed, all that good stuff.
For sure. And now it's time to, put on our prediction hats, right?
Yeah.
See if we can explore some potential post-election scenarios.
Right, exactly. We can't predict the future perfectly, but we can use the info from your sources to, make some educated guesses.
Okay, so let's play that what-if game. What happens if, let's say, a pro-business administration takes office?
Well, one of your sources, a report from the Tax Foundation, it says that a pro-business administration would probably focus on things like tax cuts and deregulation, especially for industries like energy and finance.
So we could see corporate profits go up, which could lead to, gains in the stock market.
Yeah, it's definitely possible. Investors might want to look at companies that could benefit from those policies, like maybe companies in the energy sector, financial sector, maybe even defense.
But like we've been saying, diversification is still super important.
Right. Oh, absolutely. It's never a good idea to put all your eggs in one basket, no matter what's happening in politics.
Right, makes sense. Okay, so let's flip it around. What if, let's say, a more, progressive administration comes in, one that's focused on those social and environmental policies?
Well, in one of your essays, it talks about how a progressive administration could mean more investment in things like renewable energy and healthcare.
So sectors like solar, wind, electric vehicles, pharmaceuticals, those could see some big growth.
Yeah, it's definitely possible. If those policies are done right, they could really have an impact across a bunch of industries.
Right, but we got to remember that policy implementation takes time, right? We might not see the effects in the market right away.
Yeah, that's a really good point. Patience is key, especially for long-term investors.
For sure. Okay, now there's one more scenario I think we should talk about. What if the election results are contested? Or what if we end up with like a period of political gridlock?
Yeah, that's kind of the wild card, right? And it's the one that markets usually don't like very much. Uncertainty can really lead to volatility.
So we could see those pre-election jitters, like the ones we talked about earlier, kind of come back even stronger after the election.
It's definitely possible, yeah. If there's a lot of political instability, investors might get more cautious, and that can lead to those ups and downs in the market.
So what should investors do in that kind of uncertain situation?
Well, that's when those risk management strategies we talked about earlier become even more important. Things like diversification, being careful with your trades, holding on to some extra cash, that kind of stuff. Those are all ways to kind of get through those choppy waters.
And the market's pretty resilient, right? It usually bounces back even when things are politically uncertain.
That's right. Long-term investors have seen a lot of ups and downs, and they'll probably see a lot more. It's just part of the game.
Okay, so as we're wrapping up our deep dive here, what are the main things you want our listeners to take away from all this?
Well, elections are definitely important. They can impact the market, different sectors, and your investments. But don't let the election cycle be the only thing that drives your financial decisions. That's not a good idea.
Right, so stay informed, think about the long term, and have a strategy that fits your risk tolerance and your goals.
Exactly. And remember, knowledge is power. If you have the right information and you're smart about it, you can be confident in the market no matter what happens in the future.
Well, that's all the time we have for today. Thank you so much for joining us for this deep dive into elections and investing. We hope you learned some useful stuff as you make your way through this exciting and sometimes kind of crazy world of investing.
Yeah, thanks for having me. And to everyone listening, stay curious, stay informed, and stay invested in your financial future.